recording. So what are the 5 heads of income tax? Are first of all, income from salary. That is one head. That means people who are salaried employees, they have income from the salary, and income from house property. That means they have a house and they have given it for rent and they get the rental income. That is one kind of head, another head. And then income from profit and gains from business or profession. So basically all businessmen will get the profits in their business. That is one head where businessmen will file in that head. And income from capital gains, which we are talking about, either you are investing in mutual fund or stock markets and there is a capital gain, or you are selling a property. That means you have already owned one property or bought one property and again sell it. That means you are gaining that capital gain. So for that, one more head is there, and other income sources, like there might be some other incomes which we get apart from all these heads. Those will come under other head. So these are the main 5 heads of the income tax basically. So let us get into the first of all old tax regime. So in old tax regime, that means till before our budget. So basically, like up to 2.5 lakhs of income, there is no tax levied on that. And 2.5 to 5 lakhs, it is 5%. And then 5 lakhs to 10 lakhs is 20%. And above 10 lakhs, it is 30%. This is of the old regime. And in this, all deductions are allowed. Okay, what are all these deductions? I will tell you in the next slides. First of all, old regime, what are the tax slabs? One is that up to 2.5 lakhs, it is nil. There is no tax on that. 2.5 to 5 lakhs, it is 5%. And 5 to 10 lakhs is 20%. And above 10 lakhs, it is 30%. This is the slabs that what we have in old regime. That means previously it was there. And then yes, up to 5 lakhs income is you will get a rebate, so that people who don't have above 5 lakhs income, there is no need for them to pay the tax. Even though they have to file the return, you can show the nil tax because of the rebate which is allowed till 5 lakhs. It is of old regime. Is everybody clear?
Yes, sir.
Everybody understood what is old regime? In old regime, yes, up to 2.5 lakhs is nil, and up to 5 lakhs exemption is there because of the rebate. And then 2.5 to 5 lakhs is 5%, and then 5 to 10 lakhs it is 20%, and above 10 lakhs is 30%. Okay. Yeah. Then what is old new regime? In new regime, the condition is you will not have all ATC and other exemptions. So you cannot file any exemptions in this particular regime. That means ATC is not allowed in this particular regime. And directly up to 3 lakhs, it is no tax. Up to 3 lakhs, there is no tax. And 3 to 6 lakhs, it is 5%. And 6 to 9 lakhs, it is 10%. And then 9 to 12 lakhs, it is 15%. And 12 lakhs to 15 lakhs, it is 20%. And above 15 lakhs, it is 30%. So what is the difference between old regime and new regime? Old regime is basically you can apply all the deductions which are allowed in the income tax department, where you will have a lot of sections where you can claim that particular thing in the old regime. Okay, in new regime, they removed all the exemptions. That means all the deductions, and straight away simply you can file. And in this, one more point is that previously in old regime, up to 5 lakhs, there is a cash rebate. That means people who don't have income above 5 lakhs, there is no need for them to. In this particular new regime, it has increased it to 7 lakhs. That means till 7 lakhs, there is no need for you to pay the tax. So that is the difference between old and new regime, and they simplified. That means you don't want to have any deductions, and because you want to get some deductions, you will invest in some products. That kind of thing is not required. Whatever you may have, straight away you get into this slab. If you are in that slab, you will pay that tax. That's why they have increased the tax there. Previously in old regime, if you are above 10 lakhs, your tax bracket is almost 30%. But here it is 9 to 12 lakhs, it is 15%, and 15 to 12 to 15 lakhs, it is only 20%. So you are going to get some advantage in this if you have the little higher income. But if your deductions are more and you are invested already and you are able to collect, get the deductions, then actually old regime is more preferable. And people who don't have this deduction, that means they don't invest, they did not invest in insurance, they did not invest in mutual fund or ELS schemes, whatever tax applicability is there, those people actually can go for the new regime and straight away file their tax in the new regime. So this is what is the standard deduction in new. Yeah, that's what I'm telling. So next thing is, basically what are all sections are there in the old regime where you can actually like get the deductions in the tax. One is ATC. It is the limit of ATC is up to 1.5 lakhs. So what are all you can actually get in this particular section is life insurance. Basically, if you take up any life insurance policy, and I will explain when I am going to explain about the investment options, then I will explain about that particular product. And ELSS mutual funds. That means basically there are some section of mutual funds where they are tax exempted. That means up to 1.5 lakhs, either you can take a life insurance where that can be exempted from the, like you can claim that particular deduction, and then ELSS mutual fund you can do, and provident fund. Basically, public provident fund up to 1.5 lakhs you can, and Sukanya Samruddhi Yojana is for children. It's a government scheme where you can invest into that, and then you can also claim that. And national savings certificate, where you can actually save your money, but there will be a locking period. I will explain you all those things. And then you can actually get deduction in this ATC. And tax saving fixed deposits. There are some fixed deposits which are tax saving fixed deposits, where you can, and senior citizen scheme, and also you can claim your children's school fees in this particular ATC, that is limit of 1.5 lakhs. And above that, and ATCCC also, obviously it is a pension fund which will come under ATC only, that is up to 1.5 lakhs. But there is another section where you can get 50,000 more exemption apart from ATC, that is 1.5 lakhs. You can get 50,000 more exemption in ATCCD bracket 1B, that is Atal Pension Yojana or National Pension Scheme. So if you opt for it, you can actually get 50,000 extra. That means you can get up to 2 lakhs. You can actually go for 1.5 lakhs for ATC, and also you can take this NPS for another 50,000. You will also get exempted for that. Means 2 lakhs exemption you will get. And next one is 80D. It is basically a medical insurance policy where you can claim this under 80D. Apart from ATC and ATCCD, you can also claim 80D. Suppose, for example, individuals and parents both below 60 years, the limit is 50,000. So up to, suppose you are paying for your health insurance policy around 50,000 rupees every year, you can claim that under 80D. That means almost you can get another 50,000 deduction in 80D. And individual and family below 60 years, parents above 60 years, that limit is 75. That means you are covered in your policy, you covered your parents also, and then the parents' age is above 60, then up to 75,000 you can actually get the benefit in this particular deduction. And then individual parents both are 60 years. That means you are 60 years above and your parents are anyway 60 years above. So for them, actually you can almost get almost 1 lakh exemption. That means whatever income you showed, out of that, this particular deduction you can apply and you can actually save the tax on that. So this is about these sections. And another one is 80DD. So this actually medical treatment of the dependents with disability. Okay, limit 75,000. That means people who are disabled, and for them, suppose somebody is disabled child or disabled person is there in your family, and you make some medical treatment for them, and you have incurred some expenditure up to 75,000, it is, you can actually claim under this 80DD. And medical treatment of dependent with severe disability limit, same thing, but it is a severe disability, that is around 1.25 lakhs, up to 1.25 lakhs you can claim. And 80E is interest paid on educational loan. So suppose, for example, you took educational loan for your child or somebody, and then you want to actually the loan should be on your name. And if it is there is no limit for exemption, but there is a locking, there is only 8 years period. It is, you can utilize this particular thing. That is, whatever interest you are paying on that educational loan, that can be actually offset to under this section. And 80EA, interest paid on housing loan, under section 24B, limit 2 lakhs. That means if you are owning a house, that is eligible for only one house. And if you are owning a house and you are paying interest in your housing loan, you are allowed to get almost 2 lakhs interest, whatever interest component is there for that housing loan. Up to 2 lakhs, you can actually get exemption from this 80EA. And 80G is basically, it is a donation that you give it to the charitable institutions, or you want to do some social service and you paid some money to them. Okay, and that particular thing actually it can be deducted under 80G. And it considers basically it depends upon your charity and the organization which is going to take the charity. Based on some conditions, either you can claim 50% or 100%. Both are allowed. And 80GG is rent if they don't have HRA from the company. Suppose some companies, if they are not paying HRA, and anyway HRA is also deductible. That means whatever HRA you are paying, that will be exempted from your income. So, but if your company is not paying HRA, but you are paying rent outside, then you have to produce the rental receipts. Okay, you have to produce the rentals, but for that there is only a limit of 5,000 per month, that is around 60,000 per annum. You can claim that you are paying rent and your company is not paying HRA. Okay, and 80TTA, interest paid and savings account. So we will all maintain a lot of savings accounts with us, and there will be some interests and there will be some charges, bank charges will be there. That all up to 10,000 you can actually claim from the in this section. Okay, so till now these are the exemptions, and there are specific exemptions. I don't think we need all those things in depth, because it's a case-to-case basis we need to follow. But general deductions are this. I will once again repeat: ATC, these are all products will come: life insurance, ELSS funds, provident fund, Sukanya Samruddhi, national saving certificates, tax saving, fixed deposit, senior citizen schemes, school tuition fees, everything can be adjusted in this particular ATC. And again, pension funds also comes into this. And ATCCD is after this ATC. If you still want to save more, you have to take NPS, where up to 50,000 extra you can claim. And then medical insurance will come under 80D. Okay, and 80DD is medical treatment for disabled, and 80E is interest paid on educational loan, and 80EA is interest paid on housing loan under section 24, where 2 lakhs exemption. That means you are buying a house and you are paying interest for that loan, and that interest can be claimed under this. And 80G is a donation that you give, and then 80GG is like if you are paying rent and your company is not paying HRA, then that limit up to 60,000 you can claim. And 80TT is interest paid on savings accounts up to limit of 10,000. So is everybody clear? These are all deductions available under old regime. Any questions? Okay, now let us get into the example. Is everyone here? Nobody are answering?
Sir, we are on mute, sir.
Yes, understood. Yeah. Yes,
It's
sir.
okay.
Thank you, sir. Yes,
It's
very
okay.
clear.
It's okay. Fine. Then next thing is exemption. Well, let us take one example how to actually compute your this thing. Suppose Akash works in Mumbai-based MNC and his annual gross salary is 15 lakhs. After removing all exemptions from his salary, including HRA, whatever it is there, it is exempted. Suppose he is paying around, their company is paying around 2.5 lakhs HRA per annum. That is exempted. So net salary is 12.5 lakhs. Last year, he earned 10,000 and interest income in bank account, and his total investment in ELS fund, which is one more that I will explain again, which ATC and EPF, that means employee provident fund also. He has got 1.5 lakhs ATC. He has even invested in NPS of 20,000. but limit you can go up to 50,000, and has health insurance policy for himself and his wife, for which is he is paying it. It's a just example. Suppose you also have all these things. For example, how actually you can pay the tax. That's what we are going to discuss. Just a minute. I'm sorry. Yeah. So this is this example we will see. What is happening here is, so first of all, his gross salary is 15 lakhs and HRA, LTA, what are all exempted. He will remove that in that, say 2.5 lakhs, and standard deduction is 50,000, which is allowed, and net salary is 12 lakhs. That means standard deduction is also there. I forgot to tell you, there is a standard deduction of 50,000. You can actually, for employees, for salaried people, it is allowed. Then net salary is 12 lakhs. So automatically from 15 lakhs, these are the permanent, like standard deductions, which they can avail. And after that, the 12 lakhs is the income for him. And then income from other sources is around 10,000. Maybe whatever, maybe small income he is getting. Yeah, and gross taxable income is now 12 lakhs 10,000. Okay, total. Out of that, what are all things under ATC, he is paying ELSS mutual fund plus EPF. That is around 1.5 lakhs he deducted. And then deduction under 80CCD of NPS around 50,000, and deduction under 80D for health insurance premium. He can claim up to 15,000. He is actually, you can pay up to 50,000 actually. But in this example, we took only 15,000, and deduction under 80 TTA for interest on bank account is 10,000 maximum. So if you deduct all these things out of 12 lakhs 10,000, after all these deductions, his total net income, that is taxable income, is around 9,85,000. Is everybody clear about this example? First, the standard deductions were deducted, and then other income, so the other income is added into that. In this example, I am not taking capital gains because it's a separate account again, that I will explain actually. Okay, because in this case we are not considering that he invested in capital gains and all, like he invested in a property, and that case also we'll discuss. But in a simple salaried person, and he has got all these deductions, after that 9,85,000 is the net income that he has, taxable income he has got in his hand. So according to the tax rebate up to 2.5 lakhs 0, and then 5% on 2.5 lakhs, 5 lakhs to 2.5 lakhs, that is around 12,000. Suppose for example, it is total is 9,85,000. Out of that first 2.5 lakhs, out of that first 2.5 lakhs, it is only taxable at 5%. Okay, and next thing is, next what is the balance? Around 4.85 lakhs. So that means first 5 lakhs, sorry, not first 2.5 lakhs, 2.5 to 5 lakhs, it is 5%, and then obviously he's paying, ending up paying 5% and 5 lakhs, that is around 12,500. Then balance out of 9.85 lakhs, 5 lakhs is done. He already calculated that tax, and out of that another balance is 4.85 lakhs. Okay, and for 4.85 lakhs he has to pay 20% on the 20% slab. He has to pay around 97,000 rupees for 4.85 lakhs. It's not that because you are coming into this total 9.85 lakhs, so you will not straight away pay 20% on that. First 5 lakhs you are going to pay 5%, and balance amount only you are going to pay another percent. So it's not that on the complete amount you are paying 20%. So obviously the 20% on 4.85 lakh balance of 5 lakhs is around 97,000, and your total tax payable is 1,09,500. That means basically on his 9,85,000 rupees, 9,85,000 rupees, he is paying around 1.09,500 after all the deductions that he has done. Is everyone clear about this example?
Yes.
Yes,
Correct.
sir.
Okay. So now our main interest is not this. Anyway, CA, you give your papers to CA, he will take care of it. But our main interest of this session is how effectively you can actually invest in the right products where it will give you some good return as well as you will get the tax benefit. That is the idea. You cannot just say that, okay, I want ATC, I will take some policy and then or I will take some fund. No. Basically, your investment, whatever you do out of this deduction should be able to pay you some good return also. And then it should at least beat inflation. The inflation is going up every day, and obviously 7%, 6% inflation, if you are not able to beat, obviously that investment will go waste for you, even though you will get the tax benefit, but that investment, whatever you are doing in that, it will not yield good returns. So let us discuss about what are the investment options that we can have to have the good return, as well as we can also save tax. So first of all, I will go to the another head, which is called capital gains.
स्टॉप करने के लिए
Anyone, any doubts? Please, everybody, please be on mute, please. Okay. So another section of the income tax head is capital gains. So I'm not talking about a business person, because business person income computation is very clear, same as this. He will have business income, and in that income he will have all the deductions, which is the expenditure of the business, and balance is the net payable tax and net payable income, net income, and on that he is going to pay the tax as usual, like he can have all the deductions. So this is about the businesses. So apart from all other heads, the other head which is complicated, people don't understand, is the capital gain head. So in capital gain head, there are two kinds of taxes available. That is short-term capital gain tax and long-term capital gains tax. Okay, what is the short-term capital gain tax? Is levied on the profit earned from the sale of a capital asset held less than 1 year. Okay, if you are buying a property or a house, or you are buying some shares and you are selling below 1 year, okay, that attracts short-term capital gain tax. So that is what is the short-term capital gain tax. Basically 15% is the tax rate when it applies to the stock markets. That's what I said. So either mutual funds also, if you are investing this into stock markets and mutual funds, so obviously that particular thing, STT, that means short-term capital gain tax, is around 15%. Okay. Next, long-term capital gain tax is levied under the profit earned from the sale of a capital asset held of more than 1 year. In fact, the tax rate is 20% on the most assets, but there are some exceptions. So generally, if you buy a house and you will sell after 2 years, it attracts, it's 2 years for the property. Okay, it's not 1 year for the property, but it is 1 year for the stock market investments. That means if you take shares in your demat account and if you are holding it for more than 1 year, it will attract only 10% of the long-term capital gain tax. And in the property, it is 2 years. If you buy a property, you have to wait for 2 years. After that, if you sell, that attracts 20%. Actually, on property, it is not 10%. On the property, it is 20% of the long-term capital gain tax is there. Suppose, for example, you bought some shares and hold it for 1 year. After that, you are selling that head. That means out of all heads, you have put your main salary head or other income head. And then there is another section called capital gains head. In that, suppose you invested 1 lakh in shares. Okay, you have invested 1 lakh in shares and you got a return of 1,50,000. Okay, so obviously this 1,50,000 is, and one more rule is there. Actually, you will end up paying long-term capital gain tax only after 1 lakh, that 1 lakh profit. That means you invested 1 lakh and you waited for 1 year and you got 2 lakhs profit. There is no need for you to pay the tax. There is no need for you to pay the long-term capital gain tax also, because 1 lakh is exempted. Okay. After 1 lakh, whatever profit that you make out of those investments, you have to pay the tax, especially in the case of stock markets. That means when you buy shares from the stock markets. Okay. So this is what, and a 1 lakh exemption is available for the long-term capital gains tax. After 1 lakh, whatever income they get above 1 lakh, that is only taxable, that at rate of 10% when it comes to the stock markets. So already Hari Krishna asked one question where I think some people joined very just now, just few minutes back. For their information, I'll tell you, if you are trading in stock markets or investing in mutual funds, there are only two things, either long-term or short-term capital gain tax. Okay, for long-term capital gain tax, you need to hold the securities or mutual funds for more than 1 year. Okay, in that, whatever profit you get, you will get exemption of 1 lakh. After 1 lakh profit only, you need to pay the 10% capital long-term capital gain tax. And another transaction that what you do is you buy shares today and you sell it after 3 days, after 4 days, after 1 month, or after 5 months, after maybe below 365 days. That attracts short-term capital gain tax, that is 15%. Okay. So whatever amount profit you are making out of this thing, on that you need to pay 15% tax, and then you have to add it to your original tax, which you have got the complete computation. Okay, this is how it works. And if you do day trading, day-to-day trading, okay, or in futures and options, which are speculative instruments, your tax liability is as per your slab. If your slab is around 20%, you have to pay 20%. If your slab is around 30%, you have to pay 30% on the profit that you made. And this actually, the whatever loss that you make, okay, suppose for example, not everybody are making profit, isn't it? So obviously some people make loss also. That loss can be carried forward to the next year, where you can actually, if you do profit in the next year, you can actually adjust this loss against that profit also, especially in the case of this thing, stock markets. That is one option is available. And another option is that if you are buying a property, for example, you bought a property and then you hold it for 2 years. After that, you sold the property, you got the money. Okay. But if you buy another property with the money, then again there is no need for you to pay the tax. If it is one property only, if it is second, third properties, you have to pay the tax. There is no deduction on that. So obviously, if you are, suppose you bought a house and you sold it for 50 lakhs, and that 50 lakhs in the same year, same financial year, if you invest in another house, then there is no need for you to pay. And then again, that particular thing, that means you can defer your tax for some more years till you sell that property. So that is how you can. And another way of saving tax in this is, basically there are some bonds which will give you around 5%, 5.5% return. There are some specific government bonds where you can invest up to some limit is there for that also. I think it is up to 50 lakhs. So you can actually invest that particular money into those bonds where that is tax exempted. But again, they will have some locking period. You need to wait for so many years. So this is about capital gain tax. So how you do? First of all, you compute your income tax returns by showing your, if you are salaried, salary income, and what are all you have. You have ATC. There are so many provisions are there. Like you can take life insurance. You can take ELSS mutual fund, where it is locking period is 3 years. And then you can take NPS, or you can take provident fund schemes from the government. And then you can also claim your children school tuition fees. So like that, after that, you can claim your medical insurance policy premium. And you can also claim, if you give any donations, you can claim that. And you can claim the bank charges and all, what are all incurred in this year, up to 10,000. Like that, after all sections, there will be a taxable income, and you will calculate tax according to your slab. What is the difference between old regime and new regime? Old regime allow you to actually like take all these deductions under those sections. But new regime, there is no ATC available there. Only thing is your slab rate is increased. That means basically in old, up about 10 lakhs, you need to pay 30% tax. But in new regime, 10 to 15 lakhs, you are going to pay only 20% or whatever it is, 20%, I believe. So above 15 lakhs only, you are going to pay 30%. So obviously you are getting that. So you have to see your income bracket. If you are coming near to 15 lakhs, suppose you are coming to nearly 15 lakhs and below 15 lakhs, and then you don't have any deductions to claim, you did not take anything, then it is better to file directly with the new regime where you end up paying 10% less tax. Okay, but if you have deductions more and then you want to claim those deductions, you will get you if you then it is better to go to old regime where you can deduct all those things, and if it is coming under 10 lakhs after deductions, your exemption is there. That means there is no need for you to pay 30%, you can pay 20%. This is the difference between old regime and new regime. So far it is clear for everyone? Yeah, it is there. Yes, standard deduction is allowed. Yes. Okay, fine, not a problem. So far it is clear for everyone. Any more questions?
Clear, sir.
Yeah. So next thing what we do is, first of all, let us discuss. Our main subject is not tax. Anyway, it is been taken care by our CA or some accounts person who can take care of this thing. And if you study, you will also get what to do. 100% you can take that and do it. But the point is that the wise thing is that making more money by actually selecting the good product for the tax saving. So anyway, you want to save the tax. Anyway, you want deduction. But whatever you are investing, if it is not giving you any return, it's only tax saving only you can get, but you will not get the good return. So obviously, getting the right product for the good returns as well as getting into the tax is also important. So that's why let us see. One is life insurance, another is mutual funds. That is nothing but ELSS. Then tax saving fixed deposit, provident fund schemes and NPS, and government schemes. So these are the main things that we have. And out of that, let me give focus on the investments and how you need to understand these investments. Okay. In life insurance option, you have three kinds of policies. One is called term policy, which is purely give you the risk coverage for your life and for your family. So why somebody should take, that is the first foremost thing that somebody should do. Why? Because whatever comfort you are giving to your family, okay, whatever comfort you are giving to your family, and you want it to give permanently, whatever may happen in future. Suppose I am paying 1 lakh rupees to my family and they are living happily. Okay, that happiness should be their entire life, whether I am there or not, or anything can happen to me. Then I have to secure my family with this 1 lakh rupees which I am paying right now. So no matter what it is, they should get 1 lakh every month, whether I give it or I secure my life for that amount. How much I have to secure for that? So if I have to, they have to get 1 lakh, how much amount they have to put in the bank? So let us take example of minimum of 5%, 5% return, 5% of unreturn minimum, let us say. So if I put 2 crores in the bank, if I invest, if I deposit 2 crores in the bank, then they will get this 1 lakh every month. So how much that I should insure for myself is minimum of 2 crores if my income is around 1 lakh per month. So this is how you need to calculate the term, how much insurance that you need to take as a term policy. So this is the first foremost important thing that everyone should do, because their objective of living is to making their family comfortable and giving support to their family. And yes, certainly first foremost thing is to secure their family in any kind of odd events which can happen in life. So that is the first duty. And another one is endowment policies. These are called investment policies, where you will get back your money, some money as a return but you will not get much insurance in this. That means whatever money you paid, out of the 10 times and maximum 20 times coverage only, these particular products are going to give you, but they are going to give you some return. But that return, how much that return is, you have to be very, very careful in calculating that return. Otherwise, you will end up paying something where you will not get insurance, as well as you will not get the returns on your investment also. In the both the ways, it is going to be like a waste of investment for you if you are not able to understand these products properly. And another one is market linked policies. That means nothing but basically this is a ULIP policy, which is nothing but like mutual funds. Insurance companies will have funds and they maintain that funds like mutual funds. And in this, if you invest, you will get more returns, as well as you will get insurance, but you will not get much insurance. Even in this also, you will get only 10 to 20 times of the premium that you have paid. So you need to be careful. What are the first priorities of your life? First priority, are you fully covered, fully like insured? That is the first priority. Second priority, yes, there are endowment products and ULIP products which are for specific reasons. That is, you want to have a retirement plan, or you want to have a child plan. So for that, you can actually invest in these policies. Either endowment policy or ULIP policy, you can start investing where that particular investment goes to the investment, and they will grow maybe 7-8%. In ULIP, you may get around 15-20% also if markets are good. But here the thing is, there is a purpose for you to do this, because whatever happens to you, your child education and your child priority should not actually disturb. So there are some policies which are child plans, which comes under endowment section, where you will, if you pay for 2 years, afterwards something happens to you, that company is going to take care of your child for lifetime. That means, so another 10 years, 8 years, whatever period you enter into that insurance company in that policy, they are going to pay what are all amounts they promised, even though you are not there. Even though you are end up paying only 2-3 installments. After that, another maybe 10, 15, 20 installments, if you take that, they will pay behalf of you because you are insured with them. This kind of policies and retirement plans, yes, those are the plans you need to study carefully and see which plans are giving good returns, and then you have to invest into those plans. So now when it comes to the tax planning, ATC, you have around 1.5 lakhs. So first you need to think whether I have got the term plan first. Okay, term plan I need to take because it's the first thing. Anyway, I have to have the deduction. I have to have the tax exemption. So first I will take term policy. So how much it is going to cost? Maybe at the age of 30, 35, 40. If you take a 1 crore term policy, it may cost you around 40-50,000. And that part of the ATC will be covered. And afterwards, I have a child and I want a child plan. You can go for that. I am interested in more returns because I want to participate in the markets. So I will go for ULIP plan. Like that, you need to plan and then invest this money in a right way. This is as far as insurance is concerned. Okay. So for example, term plans, these are the things. So suppose at the age of 40, if you pay like generally the regular premium till 40 years, you will pay. That is around 37,000 per month you have to pay, per year you have to pay. And there are options of 10 pay, 12 pay, like you pay for 10 years, but you get coverage up to 85 years. But the amount will be increased to this level. So it's just for an example I'm giving you. So low premium, high sum assured. That means your life is secured completely by just paying low premium, but you will not get any return out of it. Okay. So next thing is money back policies. The traditional policies, which are sum assured, will be only 10 to 20 times. That's all. Money back, retirement plan, child insurance, and pension plans come under this category. Okay, that which I explained. And ULIPs, basically insurance plus investment, multiple fund options like mutual funds, and higher returns can be expected in this. Okay. And And main important thing is, suppose this is one area where you can look into ATC. When you are want to do ATC, you can look into this option, which is very, very good. That is what is called ELSS. Okay. I heard the deduction 1 lakh in the new or older. Tax saving plus wealth creation. Okay. So basically like it is only 50,000. It's not 1 lakh, sir. Ganesh Garu. So it is only 50,000. Anyway, let us see. Let us first of all complete the investment options where it is very much important for you. And there is very good option of ELSS. What is ELSS? Is basically under a fund equity linked scheme in the only kind of mutual fund eligible for tax deduction under provisions of Section 80C for the Income Tax Act 1961. Okay, you can claim the tax rebate up to 1.5 lakhs. That means if you want to invest in mutual fund, it will be having a 3 years locking period where you can invest up to 1.5 lakhs lump sum amount, or you can also do SIP every month. So that is what you can do. So obviously the condition of ELSS.
Wednesday afternoon.
So ELSS option funds law, the main rule is 65% should be equity linked fund. That means another 35% they can invest in any other instruments, but 65% should be in the equity schemes. That's what is the condition in the ELSS option. And why I want you to go for this option is basically, if you see, if you invest in all other options except that insurance part, leave it, let us discuss about it. There are some new products which are launched in the market where they are giving very good return as well as insurance cover also. I will explain you in the last, but initially what I mean to say is this is one of the best options. Some part of your ATC actually you can do in this by way of SIP, systematic investment plan, in ELSS funds. So generally, if you go for fixed deposit, the returns can be around 4 to 6%, and locking period will be around 5 years. And if you go to PPF, returns can be around 7 to 8%, and locking period will be around 15 years. Okay, but there is no tax on the final return. The National Savings Certificate 7 to 8% and 78% returns, and 5 years locking period is there, and tax on returns is you need to pay at that time. Then National Pension Scheme, 8 to 10% return till retirement you need to hold, and partially taxable. And ELSS fund, here you can see 15 to 18% return, and 3 years only is the locking period. Okay, you have a facility to withdraw after 3 years, and partially taxable. What is this partially taxable? I will explain. Okay, so first of all, let us discuss how to maximize benefit out of your investments while saving tax. Understand the priorities of your life. Have a proper financial plan. What it is very important is that it's not only just think about tax saving, but also think about priorities of your life. For that, you need to do proper financial planning. Okay. And for that, if you want to do financial planning, there are 3 things. One is financial planning consists of, one is protection. Protect whatever you have right now. That is the first thing. And second thing is saving, and another one is investment. These 3 things, if they are taken care, then your life will be very, very good. So for that, if you do the financial planning properly, then you will understand under ATC 1.5 lakhs, in which instrument I have to invest. For example, important things to do is proper life insurance, that is term plan, and then select investment options that can beat inflation and give you good returns, and then secure your future with proper pension plans also. So these 3 things are, you should keep it in mind while you want to get exemptions from these sections. Okay, yeah. So now there are some products which are launched very recently, few months back, in fact, where previously in insurance section we thought that if we take a term plan, we will not get any return of money, isn't it? And if you take endowment plan or ULIP plan, you are not getting insurance properly. Both the things now are available in few products. which are launched very recently. And one of the product launched by HDFC Life, that is Smart Protect Plan. I'll explain you this. Why I am explaining you this is the plan where it will take care of your retirement, as well as it will give you higher insurance also. How it is? The both insurance investment together, a unique product that gives maximum insurance and a very good return on your investment. For example, if you take plain term plan, and you are opted for taking 10 pay, that means you will pay up to 10 years and till 85 years you have a coverage. For that, how much premium you need to pay? Around 87,000. So you will pay 87,000 till 10 years. After that, your life is covered for 1 crore for lifetime. Okay, up to 85 years. So this is what it is. Now, yeah, there is a plan which is launched by this company where the same age is 40. Okay, and basic sum issued is 1 crore here. And you are going to pay 12 years. And then there are two inbuilt riders in this, where 50 lakhs is accidental disability and 50 lakhs is accidental death cover. That means total 2 crores you are covered. And this particular plan is linked with a ULIP plan. It's not a pure term plan. Okay. And that plan actually, like this entire 1 lakh is been invested in a fund maintained by them, by HDFC Life, where we selected one fund called Discovery Fund. And if you see the performance of this fund till inception, that means from the inception of this fund, it has given around 20.87% return. That means whatever you are paying this 1 lakh, it has been invested. Previously, in other case, in pure term plan, whatever 87,000 you are paying, it is not been invested. You are not going to get anything back. Here, that also 1 crore you are getting actually. 1 crore of insurance you are getting. But in this plan, you are getting 1 crore plus another 50 lakhs. That means total 2 crores. And you are going to get a return of 21.68% from last 5 years. That is the average return. And it has beaten the benchmark indexes. Okay. And according to IRDA rules, generally life insurance companies show the return only on the 8%, because that is the rule. Only they have to show in illustration 8% returns. That is also coming around 87 lakhs 55,000. And after 5 years of paying this policy, you have an option of taking part withdrawals also till your life is covered. So this is the beauty of this plan. Why I am telling this plan is, yes, it is going to cover everything. Like you are going to have a retirement fund and you are going to have the insurance, both together by just investing 1 lakh of rupees and paying it for 12 years. So in other case, if you take any other plans, either you get insurance or you get some money back. But both together giving in this fashion is, yeah, this is a recent development. That's why you have to review your portfolio always. You have to review your existing policies always, because there are a lot of new policies, new plans are coming up to the market because of the competition, and people will get more and more advantages. So now what you have to do, you have to review your portfolio and then see which plan you have, whether it is giving good insurance or not, or good returns or not. And if it is not giving good return, yes, then certainly you can think of changing your plan to the new plans which are coming up in the market. So this is updating yourself with the latest things. Okay. And this is one. And another important aspect is ELSS. So first of all, why ELSS fund? It is basically 15 to 20% returns, where it can beat the inflation. Still you get around 8 to 10% returns above on that. And systematic saving. Okay. So that means every month you can pay 5,000, for example. Suppose you have 1.5 lakhs, up to 1.5 lakhs, you have ATC. Out of that, say 60,000, you invest in ELSS fund. Every month you pay 5,000 as an SIP in ELSS fund. The advantage of doing this is, basically, suppose you are paying in this month, say Jan 2024, 5,000. Okay. exactly this 5,000 will get matured after 3 years, Jan 2027, 27 or 28, 27. 27, this 5,000 you can withdraw. Like that, it is from the day you started investing, you will every 3 years, your maturity also comes up, and you will get the tax benefit for entire 60,000 what you paid in this year. That means every month 5,000 you are paying. So obviously this entire 60,000 you will actually claim under ATC. And long-term capital gain tax with 1 lakh exemption of the tax. So what happens? Suppose, for example, you are withdrawing after 3 years. There is a 3 years locking period for this. After 3 years, when you are withdrawing, suppose your 60,000 has become say 1,50,000, for example. Okay, 1,50,000. 1 lakh, say 1,60,000. Let us say 1,60,000 after 3 years. So your 60,000 is become 1,60,000. Still, you don't have to pay the tax, because under long-term capital gain tax, 1 lakh is the exemption available. After 1 lakh, suppose you are making 2 lakhs out of this 60,000, which you have invested in this scheme. Okay, then you have to pay 40,000. On the 40,000, you have to pay only 10% of the long-term capital gain tax. In this way, if you see, this is a very effective, good investment when you can make and also get the exemption under ATC. So what I say to all of you is, whenever you are trying to get some deduction of the tax, either ATC or mainly ATC, see whether that product is giving you good return or not, or whatever you are taking, whether it is useful for your life or not. So that means your priorities, your child, your life, and your health, everything is covered properly or not. So you can utilize it for the tax benefit, as well as you can utilize it for your life purpose also. So in that way, you need to think before investing. And another one is, apart from this insurance and ELSS fund, I also suggest you to go for some retirement fund, so which will help you in the long run. So suppose for example, if you have 1,50,000 deduction is required for you according to your salary, for example, that is only the availability, isn't it? So what you can do is, you can put 50,000 in insurance, you can put 50,000 in ELSS fund, and you can actually go for, if your deductions are more, you can actually go for NPS, which is a retirement fund, where after retirement only you will get the money, you will get the pension. So obviously you can invest another 50,000 in that, save another 50,000. That means instead of 1.5 lakhs, you can save up to 2 lakhs. So then if you have a house, you can get another 2 lakhs exemption if you are taken your house in the on loan. And these are all deductions you can actually you can take advantages. But while applying these deductions, also think that which is important, which gives you best benefit. The product what I explained, it is giving you the very good insurance cover. That means generally it will give all ULIP policies give only 10 times of premium what we pay. Suppose if we pay 1 lakh rupees, generally it is only 10 lakhs insurance cover we get. But in this product, they are giving, it's a new thing which has come up. They are giving almost 1 crore as well as another 1 crore as an accidental benefit. So total 2 crores of cover you are getting, and also you are getting that particular money which you are investing is invested in a mutual fund kind of a thing, that is ULIP. And in that also there are a lot of funds. Which fund is giving the best return, you can actually park your money, and after 5 years you can actually start withdrawing some partial withdrawal also if you have any emergency. These kind of all facilities in one product, it's like a great thing somebody can have. So obviously this is a new one, so many people don't know about it. That's why I'm explaining this today. Like that, you need to study in the market which are the best things for you and which are the good things which can help you for building your finances, as well as also give you some tax benefits. Okay, this is the main thing. Then another section which I don't think any businessman is here, but if you are an entrepreneur and you are running a big business and you want to save your tax, corporate tax. That means your business tax. Then there is a product called business insurance where you can defer your tax, you can protect your company, and your contingency planning can be done, and your working capital also can be equipped. So all in one. You can save tax, you can protect your company, you can actually mitigate the risks of your company's future, and you can use it as a working capital also. So these are all there for the business insurance. People who are companies or private limited companies, partnership firms or proprietary firms, whoever it is, if they are paying huge taxes, they can actually opt for this solution of business insurance, which we can explain one to one because it's a big subject. And in fact, I don't think a lot of people are from business section in this room. So obviously, if somebody is there, you please call me. I will explain you how you can actually take advantage of this business insurance for your organizations. Okay. So this is all about the session. Thanks for your time in the year end. And now I will open the session for the questions. And also people who joined late, I will send this recording to you people. So don't worry about it. Go through that and understand how you can actually effectively save tax as well as very good return out of whatever you are investing. Okay. Yeah. So now I can open this session for any kind of questions.
Sir, hi, sir. Thank you for such an enlightenment section, sir. Sir, I have one doubt, sir. Recently, when I'm discussing with my friend about term insurance, if we are around the age of 40, the term insurance will be around 37,000 to 40,000 per annum. But he suggested me one thing, you take for 5 years, there is a policy. If you take for 5 years, then it will cover for 85 years. Is it correct, sir? Can we go ahead with that?
Correct only. But the premium, whatever you are paying, it will be around 1.5 lakhs.
1.5 lakh. Yes, sir. He told about 1.
That is what I mean to say. That is what exactly I have showed now in the slide. Instead of paying 1.5 lakhs, you pay 1 lakh only for 12 years. You are getting 2 crores of insurance as well as that 1 lakh also invested in a ULIP. That is the beauty of this product, which I explained. So that is what I mean to say. Generally in term plans, what happens? There is a 5 pay, 10 pay, 15 pay or regular pay. Regular pay means till the lifetime you have to pay.
Okay.
Every year you have to pay. Suppose you want to cover up to 85 years, 84th year also you have to pay that 37,000.
Okay, sir.
Okay. And instead of that, now companies have come up with a system where you pay in advance and take coverage because you are earning now. Okay. Yes. And in the engage and you will learn more. Obviously, what you will do is you will cover your life up to 85 years, but whatever premiums you are paying every year, you are going to pay in advance. That means you are going to pay. Suppose if it is 10 pay, I have already shown you 40 years example only.
Yes,
if it is 10 pay, it is around 88,000. If it is 5 pay, it is around 1.5 lakhs. If it is regular pay, it is nearly 37,000-40,000. So instead of that, you pay the products which are launched recently. I think all companies have launched, but I have gone through HDFC Life product. That's why I'm explaining you. So where you will get both whatever 1 lakh you are investing, it's going into an investment. It is going to work as a retirement fund for you. That means you are not wasting money. Number one. Number two, you are going to get 1 crore basic cover and another 1 crore as an accidental disability, accidental death. So one in all, like all the things in one product. That is the caption of that product, and it is being sold like anything now in the market. So that is what these kind of products will give you more and more benefit. If you only take term plan, you will not get any money back. Obviously, this will address both the things, and that's why these kind of products will help you in planning in a proper way.
Okay, sir.
Yeah.
Thank you.
Anyway,
very much, sir.
You get in touch with me. I will give you all the details.
Sure, sir. Sure.
Yeah. So, any more questions? And I suggest you to go with the ELSS fund also. First of all, systematic investment is required for anybody's life. So obviously, there is a golden rule by Warren Buffett. What it is? Spend after spend the money after saving. Okay, don't so first of all, saving should be treated as an expenditure. That means every month you should save, and if you save in this fashion in a ELSS fund, you are going to get huge tax benefit. Not only that, you are also going to get very good return, because 3 years is the locking period, where any time in equity markets, if you invest any mutual fund for 3 years, you are going to get very good return. And another 10 years is a golden period for Indian stock markets. Obviously you are going to get much more. So instead of worrying about the tax, every month you pay fund 5,000 or 10,000 as in this fund, and you save properly for your future, and also you get the tax benefit. And after, at the end also, whatever you are receiving, 1 lakh is exempted anyway, and after 1 lakh you are end up paying only 10% tax. So in that way, what you are doing, you are actually reducing your tax burden, as well as you are creating a very good asset for your future. Okay.
సో సార్, ఇప్పుడు టర్మ్ పాలసీ మిగతా ఏ హెల్త్ లైఫ్ ఇన్సూరెన్స్ లేని వాళ్ళకి, సో డైరెక్ట్ గా మీరు ఇందాక చెప్పినట్లు HDFC స్మార్ట్ కవర్ కి వెళ్ళొచ్చు కదా సార్?
అవునండి.
ఓకే ఓకే సార్. 12 years
అది రీసెంట్ గా లాంచ్ అయిందండి ప్రొడక్ట్. ఇదివరకు లేదు. ఇదివరకు ఈ ఫెసిలిటీ లేదు. ఇన్ఫాక్ట్ నేనే తీసుకున్నాను, తర్వాత మా ఫ్రెండ్స్ అందరికి ఇప్పించాను నేను దగ్గరుండి. మరి ఎందుకంటే వాళ్ళు తీసుకున్న ప్రొడక్ట్స్ లో ప్రాబ్లం ఏంటంటే, ఐదర్ టర్మ్ పాలసీ ఉంటది, వాళ్ళు కడుతూ పోతుంటారు, కానీ మనీ అయితే వెళ్తూ ఉంటది కాబట్టి రిటర్న్ రాదు. అలా అని ఒక యూలిప్ ఎండోమెంట్ పాలసీ తీసుకుంటే ఇన్సూరెన్స్ రాదు. అంటే వాళ్ళు తీసుకున్న ప్రీమియం ఓన్లీ 10 times ఇన్సూరెన్స్ వస్తుంది. ఇన్సూరెన్స్ కావాలి, రిటర్న్ కావాలి. మరి దీనికి సొల్యూషన్ ఏంటి అంటే, దిస్ ఇస్ ద రైట్ సొల్యూషన్.
సార్, ఇందులో హెల్త్ అంటే జనరల్ హెల్త్ ఇన్సూరెన్స్ తీసుకుంటాం సార్, అది కవర్ అవుతుందా లేకపోతే?
లేదు, హెల్త్ ఇన్సూరెన్స్ ఇస్ ఎంటైర్లీ డిఫరెంట్ సబ్జెక్ట్. హెల్త్ ఇన్సూరెన్స్ కూడా చాలా మందికి తెలియని విషయం ఏంటంటే, 4 years మనకి ఎక్స్పీరియన్స్ ఉన్నాకే ఆల్ డిసీజెస్ కవర్ అవుతాయి. సో హెల్త్ ఇన్సూరెన్స్ ఈజ్ ఓన్లీ ఫర్ ద హాస్పిటలైజేషన్ పర్పస్. అంటే బేసికల్ గా 24 hours హాస్పిటల్లో ఉంటేనే హెల్త్ ఇన్సూరెన్స్ మనకు కావాలి. అంటే బై ఛాన్స్ ఏదైనా, అప్పుడు కోవిడ్ లో మా ఫ్రెండ్ ఒకడు ICUలో 30 days ఉన్నాడు. ఈ స్పెంట్ అరౌండ్ 25 lakhs. సో హెల్త్ ఇన్సూరెన్స్ ఉంది కాబట్టి బతికిపోయింది, లేకపోతే ఏమై ఉండేది, లైఫ్ మొత్తం డిస్టర్బ్ అయిపోయింది. సో హెల్త్ ఇన్సూరెన్స్ అనేది బేసిక్ గా ఇట్స్ కంప్లీట్లీ డిఫరెంట్ ప్రొడక్ట్. లైఫ్ ఇన్సూరెన్స్ ఇస్ కంప్లీట్లీ డిఫరెంట్ ప్రొడక్ట్. హెల్త్ ఇన్సూరెన్స్ విల్ టేక్ కేర్ ఆఫ్ యువర్ హాస్పిటల్ ఎక్స్పెండిచర్స్ ఇఫ్ ఎనీ కైండ్ ఆఫ్ అన్సర్టన్ యాక్సిడెంట్స్ కానీ, లేదా ఏదైనా క్రిటికల్ ఇల్నెస్ కానీ ఏదైనా వచ్చినప్పుడు మీకు హెల్త్ ఇన్సూరెన్స్ ఉపయోగపడుతుంది. కంపెనీల్లో మీలాగా వర్క్ చేసే వాళ్ళు, కంపెనీ ఇస్తుంది. కంపెనీ ఏం చేస్తుంది అంటే, కంపెనీ బేసిక్ గా ఇట్ గివ్స్ యూ యాజ్ ఎ ప్యాకేజ్ ఆఫ్ ద టోటల్ ఎంప్లాయీస్. వాళ్ళు ప్రీమియం పే చేస్తారు ఇంతని, అందరికీ ఇంతింతని కవరేజ్ ఇస్తారు. ఒక్కొక్కసారి ఆ కవరేజ్ సరిపోదు, నెంబర్ 1. నెంబర్ 2, మీరు ఆ కంపెనీ నుంచి మానేయంగానే మీకు హెల్త్ ఇన్సూరెన్స్ ఉండదు. అదొక ప్రాబ్లం. సో అప్పుడేమవుతుంది, మళ్ళీ ఫ్రెష్ గా తీసుకుంటే మళ్ళీ 4 years కానీ మీ ప్రీ ఎగ్జిస్టింగ్ డిసీజెస్ అన్ని కవర్ అవ్వవు. సో అందుకనే ఏం చేయాలంటే, ఈవెన్ దో యు ఆర్ ఎంప్లాయిడ్ and your company give you insurance, you should also take one policy with a small amount తీసుకుని పెట్టుకో. అప్పుడేం చేయొచ్చు అంటే, మీకు ఆ ఎక్స్పీరియన్స్ వస్తుంది. అంటే బేసిక్గా 1 year లో కొన్ని కవర్ అవుతాయి, 2nd year లో కొన్ని కవర్ అవుతాయి, 3rd year లో కొన్ని కవర్, 4 years అయినాక మొత్తం అన్ని కవర్ అవుతాయి. సో ఆబ్వియస్లీ ఇప్పుడు నేను డయాబెటిక్ ఫర్ ఎగ్జాంపుల్, నాకు ప్రీ ఎగ్జిస్టింగ్ డిసీజ్ అది, ఆల్రెడీ ఉన్న డిసీజ్ అది. సపోజ్ ఫర్ ఎగ్జాంపుల్ నేను ఇప్పుడు హెల్త్ ఇన్సూరెన్స్ పాలసీ తీసుకుంటే నాకు డయాబెటీస్ వల్ల ఏమొచ్చినా కవర్ అవ్వదు, అది 4 years తర్వాత. సో కాబట్టి ఏంటంటే, నేను అదే 4 years వరకు వెయిట్ చేయాలి. నా డయాబెటీస్ ప్రాబ్లం వల్ల నేను హాస్పిటలైజ్ అయితే అది కవర్ అవడానికి నేను 4 years వెయిట్ చేయాల్సి వస్తుంది. అలాగే కొన్ని క్యాట్రాక్ట్ అట్లాంటివి 2 years వెయిట్ చేయాలి. సో కాబట్టి ఏంటంటే, ఎప్పుడైనా సరే హెల్త్ ఇన్సూరెన్స్ పాలసీ పర్సనల్ పేరు మీద కూడా ఒకటి ఉండాలి. అది చిన్న అమౌంట్ తో తీసుకుంటే, తర్వాత మనం ఒకవేళ కంపెనీ మానేసినప్పుడు ఇది ఉపయోగపడుతుంది. ప్లస్ దీనిలో మనం టాప్అప్ పాలసీస్ ఉంటాయి. అంటే 25 lakhs 50 lakhs కూడా టాప్అప్ చేసుకోవచ్చు విత్ ఎ వెరీ వెరీ స్మాల్ ప్రీమియం. ఎందుకు, బేస్ పాలసీ ఇంపార్టెంట్. ఈ బేస్ పాలసీ ఒకటి పెట్టుకోవాలి, 5 lakhs ఎంత తీసుకుని పెట్టుకోవాలి. దట్ ఈస్ ద మోస్ట్ ఇంపార్టెంట్ థింగ్ ఫర్ ఎవ్రీ ఎంప్లాయీ హూ ఈస్ వర్కింగ్ ఇన్ ఎనీ ఆర్గనైజేషన్ ఆల్సో.
ఫ్యామిలీ హెల్త్ ఇన్సూరెన్స్ బెటరా సార్, ఇండివిడ్యువల్ గా తీసుకుంటే బెటర్?
ఏదండి,
ఫ్యామిలీ హెల్త్ ఇన్సూరెన్స్ తీసుకుంటే?
ఫ్యామిలీకే.
మీరు ఏమైనా
Total
సజెస్ట్
family
చేస్తారా సార్? గుడ్ వన్.
ఏమండి?
మీరు ఏమైనా సజెస్ట్ చేయగలరా సార్? గుడ్ వన్.
Ah, see, Wealth Tree is having all the companies. We are into insurance, general insurance, health insurance, and life insurance. We have all the companies. We can give you any product in the market. Wealth Tree lo manam oka particular company the agent like ammam.
ఓకే.
Basically, we see what is good for the client, customer, and then see his profile and suggest the product. A company any which one problem in. So we have all the health insurance companies. We have all the life insurance companies. Don't worry.
ఓకే సార్, థ్యాంక్ యూ.
Okay, thanks for your time and wish you very, very, very happy, healthy, wealthy New Year.
Thank you, sir, and wish you
Thank you
the
so
same.
much. To the same, sir.
Yeah, and anybody who wants to connect with me, you can connect with me on this number on the screen, 733-110-7814. Anyway, we will send you this recording and because it's coming up 3 months is a tax season. We thought this session can help a lot of people. That's why we are conducting this session. And ours is a financial planning company as well as investment advisory company. We have all verticals. So somebody wants to take any suggestion, you are always welcome to take. Okay.
Thank you so much, sir. We learned a lot of new things during this
Yes.
session.
Thank you,
Thank
sir.
you so
Thank
much.
you.
Yes.
Amazing
Thank you.
session. Thank you.
Thank you very much.
Thank you.
Yes.
Thank you.
Yeah.